Hey, it's Eric Hatch with Century 21, giving you the monthly update of facts and direction to conquer fear. I know a lot of us out there right now are just thinking of the interest rate, inflations, and things that are kind of happening. That people are concentrating on one element, and that is fear. And guys, there's so much blessings out there and so much that's kind of going on. And so I'm so excited to share with you about the market update today in regards to kind of the facts. So many times, guys, we just listen out there. There's so much negative news, or they may share a little bit of the news, but not all of the news. And so then we just take kind of the negativity of it. And we need to start thinking and creating more positivity. Because I think the first responsibility of a true leader is to define reality, says Max D. Pree. And that's really what it is, to actually see what the reality is, control our narrative, and be able to take the facts and then make educated decisions on based on what we know. So finding the leaders in the industry and listening to them and feeling kind of understanding what might be going on for your benefit. So I want to share with you guys about and I shared this before, this is the mortgage news. And again, this was the last statistics around beginning of March. So you can see that the good buyer demand right here is when interest rates have been in the 6 and 6.5. You can kind of see when the interest rates kind of go up, we get a little bit of negative news on inflation. Interest rates go up, we have some good news that happens, they kind of trickle back down. So they are kind of dipping back down into this good buyer kind of demand kind of area. I am seeing so many houses right now that are going pending. There's homes, I was showing houses in Auburn Lake Trails. The 4 houses that I showed over there are all now gone. There's 2 or 3 of our listings in the last couple of weeks that are gone. Guys, I've got 3 first-time home buyers that are in contract with rates of locking in rates at as low as 5.2 with the interest rate buy down. So there are good deals out there that you have to sift through the higher priced ones and find the good ones and then match that up with a nice puzzle. So I really feel, and I can talking to a lot of my friends in the title industry as well, that they're picking up the orders and their people are, coming into the contracts a little bit more easily right now, which has been fantastic. But let's talk about inventory and let's talk about a few things that kind of control these mortgage rates. I want to share with the guys that you can see, I'll lower my picture here, that you can see that the interest rates are really controlled by the 30-year mortgage rate versus the 10-year treasury yield. And you can see in the last month here that we've actually couple months that we've been kind of going on this high level where interest rates are kind of going up, but it traditionally kind of follows this 30-year fixed mortgage rate with the 10-year treasury yield. So yes, that is kind of moving, but I want you guys to concentrate on some positives of things and kind of understand a little bit about the inventory, because the economy is showing signs of resilience, mainly due to the consumer spending, and the rates are increasing. Overall housing costs are also increasing and therefore impacting inflation, which continues to persist. And so that was from Sam from Freddie Mac. But I want to share kind of something that's happening here with the inventory and the challenge of inventory, because this is where that things that where people are saying, hey, this is going to be a huge crash. Things are just going to like completely just go off the end of the cliff. And then I'm not going to buy right now. Sellers are a little bit nervous because what should I do? Should I hold on a little bit longer? Should I put my house on the market before spring hits? And the inventory really has been helping this market stay in a healthy seller market, because the lack of inventory has kept an upward pressure on prices. So that's why we're not seeing a bunch of prices or a bunch of crashing prices. And yes, in different geographical areas throughout the country, some of the markets really appreciate a little bit higher in Idaho and stuff, and so they're having a little bit more depreciation that's happening right now coming down. But I want to show you this listing count of what's basically transpiring here, that you can go way back here and you can see pre-pandemic in 17, 18, and 19, this was kind of our inventories of what was happening in the United States. And look what basically is transpiring. And as soon as that pandemic hit, we've just had lower inventory on the pandemic and therefore on thereafter. So if you look at this number and understand kind of what this is that we still have 47% less inventory the pre-pandemic market. And so it's kind of hard to say compare the last 2 or 3 years here. You've got to really go back of 17, 18, 19, and 20 to see kind of where the average was on the inventory. So the inventory is still low. So there's still multiple buyers out there. There are 2 offers I presented in the last 30 days have both went over asking, because there was demand on that particular house, and people saw the demand and the value on that, even with the interest rates where they're at, and they paid more money and they went over asking in today's market. Yes, the frenzy isn't quite there like it was 6 to 8 months ago, but it's still a good demand for buyers to come in and purchase a property. I wanted to show you this on the change of inventory that you can see kind of by the state graph. So you can see that our inventory, down about 7%. Nationally, it's about 6.1, and this is Realtor.com's numbers. Nevada is down about 10% on inventory. So when you look at this, I've had several people recently that have gone over to North Carolina, South Carolina, and Tennessee because they have family over that direction, and they actually were in bidding wars on property that were over there in this side of the nation on certain different states. So that's kind of an interesting dynamic there, but you can see what the inventory across the whole entire country, except maybe in Hawaii, that we have a little bit less on the percentage of less inventory. So let's all move to Hawaii. All right, so change in single family housing units, as you can see right here, is that we've got 4 consecutive years of record. I'm gonna hit one more button because I think this is the average annual units of completed. So this is the new houses that actually, if you've been watching my videos, we've been for 14 straight years building less houses than the demand is on the national average that we've actually had over since 1970 on the homes that we needed to actually fill. Now, when you have all of these crazy things with fires, tornadoes, floods, hurricanes that are happening during the country, they're wiping out hundreds and hundreds and thousands of, or hundreds of homes, even thousands of homes that they're wiping out for these unfortunate disasters that we're having, which then still puts a strain on demand of what the housing demand that we need. So if we look at this, and this is a housing market short by the millions. If you look at these big institutions here, you can see that they're thinking 5 million homes were short, 4 million, 3 million, 2 million, that we're short on the inventory right now for people to actually make moves, whether it's business, family, wherever it might be. It's still putting that demand and the pressure on keeping the prices where they're actually at. Because I love this this slide here where it says how much of the price has fallen from the peak. Now this was from about June, because you never really know when the peak is until you've actually passed it. So this is June through December 2022, that you can see that on the depreciation of the homes, they're thinking 1% by Moody's, FHA was 1.6, 2.7 by Chase Schiller. So we're not having this drastic 20, 30, 40% off sale. I get people that are calling me going, hey, I want to buy a bank repo. I want to buy something where I can actually, have something a little bit less, but we're just not seeing those. And I will let you know, hint, hint, that the bank repos are not coming as fast as they said they were coming. And when they do come, they're getting appraised at the today's market value. So there's really not a lot of benefit like there were in the last crash where you could get maybe a bank repo at 20, 30, 40% off. It's just not happening right now. So I want to share a couple more slides here with you guys. So the big question is should I buy a home right now? And I want you to know that there's another video that I have is that it talks about home ownership and the importance of it. I want you guys to concentrate on the longevity. And so let's look at these slides here. So the median asking rent since 1988, what do you see there? Rent will always go up. So there's less stability there. I get so many calls from tenants that are calling me going, Eric, I got a 60-day notice that I need to vacate my house. I've got 60 days. Can you help me find another rental? Or I've had other tenants actually say that this has happened to me twice or 3 times. So stability, because all the rents are going to go up. But can you imagine just getting in, if you're thinking about buying or not purchase a home before, being in a stable housing environment where you can actually set your largest expense, your housing expense, at a set mark for 30 years to come, that you'll be able to understand and know, and you can live in that house without somebody coming and knocking your door and saying, I got to have you go in 30 to 60 days, where you can have stability there. Because you can see on the next slide that you're going to see that the estimated national price, per performance between December forecast of quarter 22 is that you can see all of these is that, yes, we'll have a little bit of depreciation here as what we've seen on the slides, but look what's going to happen in the next few years is that you're going to see this appreciation of the value of this. In that other video that I shared with you, and on this one right here that I love, is that if you purchase a house around the $400,000 mark, which I've got 2 in escrow right now at $400,000, that both of those, if they look at the statistics here, that you will have on appreciation alone up to $54,000 of stability with that same payment, and then come out ahead versus the rent being increased on you on an annual basis. So that was kind of a cool factor that I wanted to share with you. But I also wanted to share with this too is that you can see the price changes in home prices since 1991. What do you see here? This is crazy, and I love this graph. So you know that you've got 300% price in, appreciation increase. The prices from back in 1991 were at a 300. I love seeing Utah, 588%. I remember trying to wanted to buy a couple homes out there a long time ago back in the 90s. Do you think that I should have done it? Absolutely, because I'd be so much better off financially if I had done that. So guys, check out that graph. You can pause the video, see what type of states maybe you come from across the way, but it's a great kind of a slide to look at. Thank you for providing that, FHA. So guys, going back to this, I just want to share with you guys, let's control the narrative. Just control it. There's so many different programs that are coming back out there right now of rate buy downs and doing different things that are actually, haven't seen with this, during the pandemic when it was a frenzy. Guys, if the inventory stays where it is right now and you want to go out and purchase a house and you're going to wait 2 or 3 years, and guess what's going to happen? The interest rates might dip a little bit, but then you're going to be able to be fighting buyers right now and then the multiple buyer stage, and you're not going to be able to find a house, and they're going to end up paying more money for it because the person that just locked in the rate at 5.2%, they actually, if you would have looked at that even 3 or 4 years ago when you had like a 3.5 to 4% interest rate, it was a difference of just maybe $20-$30 difference because we were able to get the rate buy down. So purchase the home, end up having approximately $54,000 of appreciation in the next couple of years. It's a smart choice. So yes, I would encourage you to find your real estate agent, give me a call, let's work together and find you a home that you can have stability in your life and be able to control the narrative. Thanks guys, we'll talk soon and have a blessed and wonderful day.